The resilience of the housing market as a long-term investment in Kenya is continuing strongly, with high demand holding prices firm throughout the economic slowdown and rising prices for houses continuing to drive overall property returns.
There's been about a 2.6% increase in prices over the last quarter, but more pertinently, an 8.8% increase in property prices from this quarter last year. So that's an 8.8% increase over the year, which is quite a good increase in the property market. It's been a gradual one. It's not as high as some of what we've witnessed in the past. But again, what we have today, which I think is more beneficial really to the market, is that we now have breakdowns of sector by sector real estate performance. So we're able to analyze which particular segments in the residential market are doing better than the others.
In a separate study with Stanbic Investment, Hasconsol reckons that returns from investment in property had outstripped money put in the stock market over the last 10 years, putting property on the path to reclaiming its place as the most attractive asset class for Kenyan investors.
For someone who invested 10 years ago in a property and someone who invested 10 years ago in the NSC and they hold their investment up to September 2010, property will outperform. But standalone houses outperformed because most of the standalone houses, which are houses with their own compounds, have been to the key areas which have been targeted by new concentrated apartment blocks. And the compound becomes of high value because someone wants to demolish the standalone compound to put up an apartment block.
Data from the Composite Housing Index shows the average price of all units around the country was 19.35 million shillings in the third quarter, compared to 17.79 million shillings in the same period of 2009, with notable price movements also being seen outside Nairobi as the market expands countrywide.
Nairobi has always been at the forefront and at the center of the real estate market in Kenya. But as we go, you see even Nairobi itself is beginning to expand outwards. You see a lot more developments happening along Mombasa Road, Athi River, Kiambu. These are all areas that are adjacent to Nairobi but are almost sort of becoming absorbed. So definitely these will benefit from capital appreciation. Again, you know, infrastructure development, for example, Thika Road, will mean that there are areas along the way that will continue to see increases. And I think it will become more and more important to sort of analyze what's happening outside of Nairobi as well.
Experts say that a combination of decades of underinvestment in housing, steady population growth, a burgeoning middle class, rapid urbanization, Kenya's position as a regional hub and improving governance are the main causes behind property boom.
There's still a lot of demand-supply inequality. Reports from the government indicate that they need to pump in about 150,000 units of housing every year, annually, to be able to keep pace with the demand. But there's been quite a shortfall. They've not been able to hit that. So so long as it keeps so long as there's a drag on the side of supply, while demand still outpaces supply, you'd always have a lot of activity.
In recent months, home loans providers have stepped up their activity in the marketplace, sparking a scramble for developers as a target borrowing class and a bridge to tapping the emerging middle class.
The importance and key contributor of mortgage lenders is they will spur new developments because they induce demand, which we call it effective demand. We have demand, but it's not effective demand. Effective demand for housing is where you are able to buy. You are demanding to buy a house, but you have the ability to buy because you are being advanced a mortgage. So it's really critical.
Experts have, however, decried the sharp increase in cost of land, which is contributing significantly to the price of new homes.
You'll be surprised the value of land in Nairobi in key areas has shot up over 100% to 150% over the last 15 months. You'll be surprised to know that an acre of land on Waiyaki Way is 300 million Kenyan shillings. An acre of land on Mombasa Road varies between 60 million, 10 million up to 60 million as you get away as farther from the city. And the other regions which are key for residential like Westlands, Kileleshwa, Lavington, Kilimani, and other targeted areas of apartments, land per acre is ranging between 100 to 150 million per acre.
I listened to somebody talking and they were saying God is making more people, but he's not making any more land. So there's a pressure in terms of demand for land. And of course, demand for land both for development by property developers and for other private uses that's a limited resource. So long as there's a lot of pressure coming in from developers, of course that has the effect of pushing up prices.
And with Kenya's economy expected to expand by at least 5% this year, up from 2.6% growth in 2009, the growth of the property market is here to stay.